I think the most people I've ever spoken to was in the meeting in Saskatchewan where there was approximately 2,000 farmers. And that was quite incredible. They were spread over 2 areas. And to have this many people from the industry and the world and gathered in one place is equally amazing. Because here the opportunity for you all to network is beyond compare. What I thought I would do is to spend more time this morning talking about just the world outlook for the various pulse categories. I didn't want to get too much into the specifics with each country because those are going to be handled very nicely by some of the panels that are here this morning and this afternoon. And I felt by giving a bit of a world overview that would provide a better starting point for them in their discussions and maybe make something interesting for you. This is the first time I've ever done this. I've had people ask me for this type of information for many years, and only now have I gotten brave enough to give it a shot. Just to set the tone for it all, I think that probably the best way to summarize the events of the last probably 18 months is that there have been nothing but problems. I remember when I was trading grain that Friday was always the most wonderful day of the week because it meant I had 2 days that I didn't have any problems facing me. Monday was always a day of dread. I feel that the way talking to people, it has almost sounded like for the last 6 months or so that there's been no difference between Friday and Monday. Friday has been a day of dread because you knew that when you came in on Monday, it was just going to be a whole new host of problems. Some of it's the headache, the hangover from the 2010 crop. Not only were there problems in Canada, there were problems in other parts of the world with quality, and that has affected the market and affected the attitude of buyers in many countries towards trading. Then we've had currency problems the last several months. Amazing shifts and fluctuations in currency. Nothing comparable to that in my memory in the many years I've been involved in this business. You had people that one day had a profit in trades, 2 weeks later they had none, 2 weeks after that they had losses. And those things began to back up through the industry with people saying, you know, how can I pay? I can't afford to bring this stuff in. Then we had trade sanctions. Iran is probably the best example of that, where the escalating trade sanctions finally reached the point where the Iranians could no longer pay for any product they had bought. By some reports, there were hundreds of containers of lentils and other pulses that were backed up all throughout the Mediterranean area in Turkey, Egypt, the United Arab Emirates, that could not be moved in because people could not be paid. You've had phytosanitary issues which have come and gone over the last 2 years, the glyphosate issue. There's been no end to them. Problems with canary seed into Mexico. Worries that we're going to get hit by zero tolerances on GM from various parts of the world. Even though we don't have GM pulses, they're handled in the same facilities, and there is the potential of cross-contamination. There are all these issues that are created by government. It almost makes you feel like government has gone out of its way to create problems so it can solve them. Maybe that's what, that seems to be what politicians like to do the most. Then we have the ongoing problem of weather. And that's something we just can't fight. You can only look at the forecasts and hope that they're beneficial to you. But it almost feels like the weather has been more changeable in recent years than it was in the past. That's associated with climate change, whether you believe it or not. I know that I've actually lived long enough that I remember when winter was winter in Manitoba, where I grew up. Now it's not winter anymore. It's more like fall or spring. So there's definitely been a change there. It's affected the rainfall patterns, the weather patterns across the prairies in ways that are beyond the current imagination of the people that live there and beyond their experience. This reminds me of a story that I heard listening to some TED speeches. And many, many decades ago, more than a century ago, 2 shoe salesmen went to Africa. And one of them went there, they both toured around for a while, and one sent a cable back to his head office. He said, "Situation terrible. Africans don't wear shoes." The other salesman sent a cable back to his office, and he said, "Situation wonderful. Africans need to buy shoes." We've been going through a period where I think everyone feels like no one wants to wear shoes, and I think when I finish this up today, I want to posit that maybe we should look at the other way. Thought we'd start with the field pea outlook. For the coming year, we're looking at a bigger North American crop. Acreage in Canada could reach 3.2 million acres or more this year. We'll know on Tuesday what that number is. The seeding intentions for Canada will come out then. We already have the seeding intentions for the United States, some initial ideas for Australia. But the thing to remember when you think about these numbers that are coming out on Tuesday, and a lot of the numbers that you'll hear today, when we're talking about Northern Hemisphere crops or crops for 2012, we're talking about crops that have more, by and large, not been planted yet. And intentions do not equal seeded area. It just represents the farmer's first shot or first statement to the trade of what he would like to do, and he's waiting for the market to come back and tell him whether or not that's a good idea or a bad idea. France is looking at a smaller crop this year. Because of the less support for the use of peas for feed, farmers have lost interest in it, and they've moved away from it into other crops, primarily grains and oilseeds. But even though all of that's happened, it looks like that we will have a larger world crop. And however, I think the period of tight supplies that we've experienced this year in peas is going to continue for the next season. And this is just a chart that just shows you graphically what I'm thinking about in terms of production. You can see the increase that I'm looking for to happen this year. It's come off of some fairly good lows there, but we're not at the highest points that we've been in recent years. Here I just looked at production rather than acreage. For production, whenever I forecast production, I look at average yields for the last 5 years. I try not to think in terms of whether or not the weather would say production will be higher than that or lower until we get farther into it. I know in Canada you can be probably 4 weeks ago in Canada or 5 weeks ago in Canada, the talk was increased talk of drought and that would affect everything this year. Then we got a blizzard that swept across, and all of a sudden we got beneficial moisture from the snow. And the situation has changed where Saskatchewan agriculture says there's adequate moisture in almost everywhere in Saskatchewan, a few pockets of excess moisture, and a few pockets of inadequate moisture. World production here, as you can see, I'm looking at approaching 9.5 million metric tons. That's up 1 million tons from last year, but it's still slightly below the recent 5-year average. If you were to look at this on a supply-demand basis, you can see clearly that while ending stocks or residual supplies of peas will likely go up around the world, it still remains at a very low level, and it remains at a level that I think everybody who's involved in the trade would consider to be sold out. When I'm trying to do this, I think when you look at stocks reports or ending stocks estimates, that you need to bear a few things in mind about it. One is that it's very hard to know what actual stocks are in every country in the world, and I'm trying to do something like that here. I know what I think will happen in the major suppliers, Canada, the United States, Australia, and those numbers become a little bit firmer in my mind to put in there, and I've tried to make some estimates of what I thought would happen in the rest of the world. The other part of stocks that you always have to remember too is that the whole food pipeline is very long, and there could be several months of supply always in the whole pipeline, in warehouses, in canned goods, in packaged goods, split or processed peas being in various locations that are beyond the normal marketing chain or beyond the part of the chain that we're specifically interested in. And so the world stock situation would always be more ample than what I would be showing here and what we would think of as traders. If we look at the price performance of peas, we can see that they have risen over the past year. Yellow peas out of Canada have been one of the best priced ones in the whole complex. I didn't put in green pea prices for Canada because it's a very small crop, but those prices have also been exceptionally strong, and they've been rising recently. Peas for France and Australian dun peas have been down below Canadian peas, but they've all been following this, staying within relative distance of each other, and certainly have come off the lows that we saw a couple of years ago. And that's a fairly positive thing for people who are selling peas, And I think going forward, if I looked at the next year, I think that pea prices on average could be lower than they are this year, but I don't think that there's going to be that much of a decline. And if you look at if the production ends up the way I think, and residual supplies end up the way I think, you can see that we're going to stay in a tight supply situation, and that's going to make it very hard for prices to move. For lentils, on a worldwide basis, roughly 2/3 of the crop is going to be red lentils and 1/3 is going to be green lentils. In Canada, there's been a huge shift. A couple of years ago, we were looking at red lentil production, approaching 60% of total crop in Canada. This year, we're probably looking at red lentil production dropping down to around 45% of all the lentils that will be grown, and that's just a simple reflection of the relative economic performance of reds versus greens in Canada. With the outlook that I'm looking at in Canada, we're looking at green lentil acreage to go up, to go down less than red lentil acreage will go down. So the production will be relatively larger, or a higher percentage of the crop will be green. We have still large ending stocks available in Canada, and I think that that will end up expressing itself as lower average green prices in the coming year. But with red lentil production going down, I see the potential for higher average red lentil prices in the coming season than was the case this year. Over the coming year, I think we'll continue to work down the surpluses that we've had. And this is what I'm looking at for production. You can see we spiked up quite dramatically to a world record level a couple of years ago, and production has been falling off. It dropped last year, and it's dropping further this year. The problem with the 2010 crop, which was the big spike, is that the quality was terrible. And that's an issue that has overhung markets for much of the last 18 months. And it is still there, but it's less of a concern. I think there's a growing sense in Canada that most of the bad quality lentils from 2010 have either been fed to livestock or have found their way out of the country, and that it's less of an issue. And I certainly get the feeling when I talk to people is there's more confidence that they're going to be getting just good quality, freshly harvested lentils from Canada, particularly in this coming year, and that concern or worry about the 2010 crop has virtually disappeared from markets. Certainly it's an issue in some areas, but it's not the way it had been. For world production for lentils, you can see that I am looking for a bit of a decrease, a massive decrease in Canada, a bit of a decrease in Australia, according to a lot of the trade I've talked to there. Gavin may have something different to say this morning, I don't know. This is always the risk when you throw out numbers for countries and you're followed by the country guy, is he may say, well, you're an intelligent guy, Brian, but you don't know nothing. And I like to think I know something sometimes. In the United States, we're looking at an acreage increase actually in the United States and the potential for a production increase. And the reason the U.S. is going a slightly different direction is that last year so much land couldn't be planted because of flooding in North Dakota and Montana, and I think that there was that pent-up desire there to grow lentils and peas, and those farmers stuck with it this year, those intentions from a year ago. But if you look at it in terms of where they had been, or even where they intended to be last year, production of lentils in the United States will be down from what farmers had wanted to do last year, and production of peas in the United States as well. So you have to look at the potential for increase in the U.S. in a bit of context like that. When I look at the supply-demand situation for the world, we've come off of a huge surplus. We're going to finish this year with a huge surplus. We had a huge one last year. By the end of the coming season, I think that'll get worked down to much more reasonable levels. And interestingly, if you look at it, we're starting to get close to where we have been in the previous 5 years on average, but the previous 5-year average includes some unusually high ending stock levels, and so that number is higher than it would probably feel as being more normal. And I think that we would really hope as an industry that within another year or so we could see the stocks-to-use ratio for lentils drop back under 10%, so that even though there are countries that may have surpluses in the export side, is that the world supply situation feels more used up and a lot closer relationship between what is needed and what is there, what is available. If you look at the prices, you can see that they have been trending down on greens in recent weeks. Red lentils, by contrast, have started to go up, and that's the effect that I was talking about. We've worked through a lot of the red lentil supply, and that's starting to express itself in firmer prices. I think, too, that the market realization that acreage in red lentils will be down next year, but that demand will be as good as it was, probably better, possibly better, is starting to express itself in grower bids and in spot markets, and that may help keep farmer interest. When I talk to farmers, one of the things that I was told was that they look at the spot market for guidance on pulses. So we could talk all we want about what we think something will be worth next fall. Farmers are looking at what it's worth right now to guide their seeding decisions. Whether that is wise or not is another question. But that's what drives them. So when you have a market, you have a commodity going down in value, it tends to push acres out. When it's going up, it may start to pull them in. For dry edible beans in the world, North America is planting more, but other parts of the world are having problems. South America is having weather problems. There were issues with Brazil's crops. Argentina was hoping to expand area a lot this year. They haven't been quite as successful as they'd hoped to be, and they're increasingly concerned about the kind of crop they will have. Some of it was seeded beyond the best, I guess, beyond the best before date for seeding bean crop in Argentina. So they think the risk of frost to that part of the crop is higher than normal, and they fear that there could be quality issues later on in the year. That's expressed itself as a sudden increase in new crop asking prices for Argentina, and that seems to be adding some firmness to the dry bean complex. I know that the feeling that I get from people there is that the market is just flat out bullish for beans, and it suggests that there may be little prospect for markets to change on a worldwide basis very much in the coming year than was the case this past year. North American markets in isolation, though, have been at a huge premium to the world, and those will probably come down to levels that are more competitive with their production going up. But that doesn't mean that world prices will be pushed down. Production, again, I'm looking for an overall increase in the world. China may not go up very much, and China may actually decrease production a little bit. Myanmar looks like it wants to go up. North American production being up, and Brazil is just there as a consumer consumer that just wanted to show what they look like. If you look at production around the world, China is one of the largest areas, possibly growing 1.5 million tons this coming year, which would be up a little bit. We'll have to wait and see on that because their crops have not been planted. Argentina perhaps up a little bit. North America up a lot, and world supply being up a fair bit from last year. On a supply-demand basis, however, we're under 10% stocks-to-use ratio, which is bang on the long-term average for the crop. So, there's no feeling of surplus there, and it's that kind of thing that will contribute to firmness in the markets going forward. The prices, this is what they look like. You can see the spike in Argentina lubia beans in recent weeks, and that's in response to their worries about the crop. I do U.S. average price. For several years, I've actually been calculating a price index for U.S. edible beans, and I do one for Canadian special crops as well. And that's where the average price for U.S. beans derives from that effort at calculation. And you can see that it's kind of been coming up this past year in response to the North American situation. For chickpeas, overall, I think there will be more chickpeas produced this year than was the case last year. I think that there will still be strategic shortages of chickpeas. A very good example of that is the Indian crop. It started out several months ago. People were talking Some people were talking about a 600,000 ton potential for Kabuli chickpeas in India. Now people talk about 300,000 tons sometimes. And I have friends in India who say, don't worry, there's lots there. I have other people that I know in India who say, do worry, there's not much there. What we do know is India has been buying Kabuli chickpeas, which is a fairly good indication that there is a real problem there that they're responding to. For the production, overall, I'm looking at an increase in production. Desi being up perhaps a little bit, and Kabuli up around the world as well. I have actually been talking to people when I was getting ready. They said Turkish production will probably be up this year. I'm waiting to be contradicted this morning. We'll see. If it is, they grow a lot of the smaller caliber stuff, which will be good for going to India and places like that. Whether or not it means a lot of difference to the world price of Kabuli-type chickpeas remains to be seen. Mexico's crop is up over what it was last year, but it's still nowhere near what they would where they would like to be, and it's nowhere near the potential for the crop. And a lot of Mexican chickpeas have been sold to India, and their feeling is that the Indian crop is very short, and they've been raising their asking prices. Apparently, that has also resulted recently in some contract defaults or technical issues suddenly coming up on contracts with India. That has caused the Mexicans to say, we can't ship against that contract, there's an issue. If we look at the world Kabuli supply-demand, again, we're looking at ending stocks or residual supplies being very tight. The trade potential, I think there's a potential for world trade to go up in the Kabuli types, but an inferred use would go up a little bit. But I think that there's a pent-up desire to consume product there and probably to restock the food supply pipeline. And that's an effect you can see sometimes. I know in some countries I've looked at, you can have a situation where you can have short crops, and I found myself saying it takes 2 or 3 short crops in a row to really express itself in the market as a change in fundamental demand. And you can see it. You can also see after a period of short crops that demand can spike up because the food pipeline has to resupply itself. And I think a bit of this effect could take place in Kabuli chickpeas. And this is what the prices have looked like. Mexico, as it was coming into new crop, started lowering their prices quite dramatically from where they had been. And recently they've started to increase them again. Canadian Kabuli chickpeas started to move down. U.S. Kabulis moved down in sympathy with what was going on in Mexico, and again, more recently, they've all been lifting their asking prices. And Desi chickpeas in Australia, which is a separate, I guess from a world perspective, it's not a niche market, but it's more focused on the Indian subcontinent, and their prices have been advancing, and that reflects the feeling that there are definite problems with the rabi season crop in India, and that demand will be larger than what anyone had been thinking. The last area I wanted to talk about was prices. I think, if I were to look forward, I think that the era of cheap prices for pulses is gone. I talked to a fellow who was looking at markets like corn, and he said $2 corn, $2.50 a bushel corn is never going to happen again. Just forget it. And if that doesn't happen, then there's no way we can have $180 food-grade peas on a consistent basis. We're not going to have $400 lentil markets on a consistent basis because all of the food items will be up. And there's this cross-commodity competition that happens at 2 levels. One is we compete for land use. If the returns from pulses are too low, farmers will stop growing them. And that means that we have to get the return to the farmer has to be competitive with what he can get from wheat, from corn, from soybeans, from cotton, from canola, depending where in the world he's growing them and what other cropping options he has in that part of the world. And those are what we're competing with for the attention of the farmer. We have the other level of competition, which is at the consumer level. If our prices get too high, food demand will migrate out of pulses into other food products. And that puts a cap on where we can go. So that creates a price band for us, one at the farmer level where we have to compete for land use, and one where we're trying to sell the stuff where we have to make sure that we're competitive to the consumer for food use. The way I would put it is very simply, the farmer's interest is to maximize return, the consumer's interest is to minimize cost. And this is where the markets meet each other, and that's where you get the friction that creates market activity, volatility, and price creation. One of the things that's very interesting, though, is that I think over the long term, and even up until this point in time, that yield gains in the various crops have had an impact on prices. I have some charts that I'll show you shortly that will illustrate the point. The other one is that prices need to compete to sustain production. I said that. And failure to compete is not an option, because failure to compete means that we won't be growing these things for very much longer, and that is not in our interest nor in the interest of human beings. I believe firmly that the human diet needs to be as diverse as possible. The more it's based on one crop, whether it's corn or soybeans, the worse off the population is on the planet. And we need to maintain diverse food sources in our diet and a diversity of crops that we grow on the land to benefit the soil, to benefit the human race. This is something that people like to show a lot about this nowadays, is the cross-commodity price relationships. This looks at Brent crude oil. It looks at the various crops. My special crops index, which is for Canada. The oilseed and cereal price indexes are from the FAO, and you can see that they are all moving in synchronicity. They move in a band, and they do move in relation to oil. I think that reflects the fact that certain food crops are being diverted into fuel production, whether for biodiesel or for ethanol, and it also just reflects the underlying cost of living and transportation costs, production costs, and things of that nature. But probably the cross-commodity competition is more important. The other part that makes that important, too, is that when funds look at commodities, they look at all commodities as one basket, whether it's oil or corn or wheat, and they will pursue commodities, they'll go into them uniformly, they'll go out of them uniformly. And so you end up with this movement of prices together at a higher level that affects us. When I was talking about the yield gains having an impact on price, this is a very interesting thing. What I've done here is I've tried to look at 5-year average yields. I picked a base of 1988 to 1992, and I said that's the starting point for yields. I'm using mainly FAO data, and I use other data that I've been able to try to put together, And the problem is that if corn yields are rising an average of 1% a year, and pea yields are averaging 1% of yield gains, which actually they're not, corn starts from a higher base. And so the yield improvement there will be greater and greater. And this has implications for price, because it goes to what the farmer's looking at. He's looking at the income he can generate on a hectare of land from all the crop options. If your yields are low relative to what he gets for other crops, then the price has to be higher. And that means that prices for pulses probably have to rise higher going forward than other crops have to on a relative basis. And that may discourage consumption, which may be one of the reasons why we've noticed a trend over many years where the amount of pulses that human beings consume has been declining. And that decline looked like it might have reversed itself for a little while in 2 or 3 years ago. It looks like it's back, and that we're starting to head down again. And I think that this sort of thing reflects that. I'm almost out of time. Everything here is up at the website shortly, and I should make it available at mine if I was smart. I guess I wanted to just end this with all of these negatives and everything like that to say, but if you look at it, there is nothing but opportunity facing us. If we understand where we want to be and we understand the issues facing us, we can attack them and we can solve them. When I was trading, we didn't care if there was a problem, whether it was cadmium in flaxseed or would have been glyphosate in lentils. We would find a way to satisfy the needs of the market and get the market what it wanted. That's the challenge facing this industry, is to find out what the market needs and to deliver it. Thank you.